So what does the economy have in store for the real estate market? Do you scratch your head and say, what's going to happen? When is the crash going to come? When can I afford a home? Well, hopefully I'm going to talk about all those things today. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. If you haven't already, please hit the subscribe button, give it a thumbs up, leave a comment, share this. Most importantly, share this with your friends and family who you think could benefit from this information. Okay? I share this to educate you, because I want you to be as informed as possible going through this financial process. And for many people, buying a home or selling a home is one of the most important and biggest investments of money and time that they're going to make. So please share this, be knowledgeable. Last week, guides. Remember, I have the guides if you're interested. I have a buyer guide, a seller guide, and the educated move approach guide. Just send me an email. I'll be glad to send those to you. So last week, I gave a market update for what the real estate market did in April. And during that market update, I pointed to some key facts that I want to look at this week and moving forward. So, number one, there's a lot of talk about, with rising interest rates, the real estate market's going to crash. Well, I did a video about this several months ago. I'll put a link to it here, right? So, the first question is, what does it really mean to crash, right? Do people mean the bottom's going to drop out? So right now, homes selling for $500,000. Next week, you can get them for $200,000. Well, that's not going to happen. Hate to tell you. You may be hoping for it, right? Some of us may be hoping for that. It's not going to happen. I did share last week that year over year, from March of 21 to March of 22, home prices in Tampa increased 30%. That's a lot. Now, I agree with you, that cannot be sustained. So what are the projections? Yeah, that price acceleration is going to slow down to maybe 2% a year, 3% a year. And truthfully, that 3% growth a year is normal. Right? That is normal historically. What we're seeing in the economy now is really the effects of a lot of the stimulus action that happened when COVID started in 2020 with that shutdown, and moving forward, all the stimulus checks we've received over the past 2 years. People were able to save this money. And now there's the economy's flush with cash. And so it's the law of supply and demand. The person with the most cash can pay more for something. And that's what we're seeing in real estate, right? So I have my pair of sunglasses, and I have $10 I can pay, and you have $50 that you can pay for the same pair of sunglasses. So whoever's selling the sunglasses wants the $50 and not my $10. So that's why the federal government, not federal government, but the Fed raises interest rates to make borrowing money more expensive, because then it takes money out of the economy and it makes borrowing money more expensive. People are less apt to spend. So, for example, in December of this past year, I did a video of my prediction of the real estate market for 2022. I'll put a link to that video here. In that video, interest rates were 3.25. And I shared that economists at that time were saying by the end of the year, November, interest rates could be as high as 3.8%. Can you believe that? 3.8? You know where we are now? 5.25. And apparently the Fed just raised interest rates yesterday, so we don't know the impact on mortgage rates yet. But 5.25. So what does that mean, right? From the end of December to I'm now in May, right? That on a typical loan of $350,000. So you take a loan, $350,000. You were paying, it's like $550 a month more to cover the PITI, which is principal and interest, taxes, and insurance. Because taxes are based on the price of the home. So if home prices have gone up 30%, well, that also impacts the tax, the property tax. So, and because the home's valued more, insurance prices go up. So as home prices have gone up and interest rates go up, yeah, just the principal and interest, it's a $400 increase from March or from December to the end of April, $400. But then you add on to that extra taxes, extra insurance, it's about $550 more. So people, buyers looking for homes say, oh, we can't afford that extra money. So what do? They scale back and say, okay, I can no longer look at a $400,000 house. I'll look at a $330,000 house. So you know what? The average home price in Hillsborough County is over $400,000 right now. So there's not a lot of $330,000 homes. So last week I talked about one of the things I want to continue to look at is the ratio between closed price and list price. So what that ratio shows is if people are willing to pay over list price for a house. I expect with the higher interest rates and people and families just not able to afford the extra costs, that ratio may start coming down, which is going to force sellers to maybe lower the price of their house. So either they price it lower to begin with, or if it's priced high, they'll reduce the price of the home over time. So we'll just have to see. However, families, I really feel bad for families that are renting because they are in this, I won't call it a short squeeze, that's an economic term, but they're really feeling the squeeze because their rents are going up. In fact, rents have gone up more than home prices. So people are facing a $500 increase in rent per month. So they say, I can just get a house and pay for less. Well, then it's, do you have enough cash to buy the house? Do you have enough money for down payment? But then can you afford the monthly fee, the PITI? However, there's still demand to buy houses. So when interest rates were below 3, you saw this rush of activity to get a house because interest rates were so low. Now rates are at 5.25. You are still going to see people buy homes. Even at this interest rate. It's crazy. Back in the 1970s, I was a teenager, but I remember mortgage rates were 16%, 17%. So even at 5%, people are going to buy a house because it's still cheaper than rent. That's that squeeze, right? You're still going to see people buying homes at 5%. Even if interest rates go to 6%, you're going to see people still buying home because there's that buyer demand because rental rates have gone up so high. So an interesting factor, so a couple years ago, I interviewed David Donaldson of Van Dyke Mortgage. And I'll put a link here to that interview. That goes back a couple years. But David we were talking the other day just about rental properties. And he said the Fed has stepped in and raised the rate. So if you're an investor and you're buying the second property, they raised the rates by 2 points. So you want to buy a second home, you're now paying almost 8% for that rental home. And then on top of that, HOA communities are now putting in place, you cannot rent a home until you've lived there for 2 years. So all these factors, all these new policies are being put in place to protect the individual homeowner. So in my view, all that is good, right? Higher rates for the investors, HOA saying we're going to protect our community. You buy a home, you have to live here at least 2 years before you rent it. So all that's good. My projection moving forward, even though rates are going up, you're still going to see higher demand. You're still going to see homes selling. You may see a quicker days to sell. Right now it's at 4. It could go on. A normal market, as I said last week, is maybe 60 days, 80 days, right? So we're going to start moving towards that trend. I'm not sure how quickly, though, because, listen, if a home goes on the market today, there's FOMO, fear of missing out. People will put an offer on that house today because they're afraid rates may go up tomorrow. So it's that FOMO is kicking in. It would be different if rates are dropping. People will say, oh, I'll wait till the rates drop before I put an offer in. But when they're going up, they're going to act quickly. So I think we're still going to see this fast pace of home sales for a little bit while. My heart really goes out to the families trying to buy a home. It's I used the term crazy in the past, and that's an inappropriate term. It's really competitive, right? And it's complex. So let me check my notes. Yeah, so I covered it. Hey, thank you so much for being here. If you have any questions or comments, please leave them in the show notes below. Send me an email. I want to be your trusted advisor. I want to be here to help you through the process of buying and selling a home. And if you or your friends and family are in that process, reach out to me. Let's see if I can help you, okay? So thank you so much. Look for me next week. And I love sharing this information with you because South Tampa, Florida living is awesome.